Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, September 25th, 2025, and here is everything you need to know as the markets open for today. US stocks extended their decline for a second consecutive day Wednesday, with the Dow Jones falling 0.4% to close near 46,100, the S&P 500 dropping 0.3% to 66,357, and the Nasdaq slipping 0.3% to 22,498. The pullback came as investors digested cautious remarks from Federal Reserve Chair Jerome Powell, who warned that equity prices appear fairly highly valued and reiterated concerns about persistent risks in both inflation and the labor market. Technology shares led the decline, with AI heavyweights like Nvidia, Oracle, and Micron Technology under pressure, amid concerns over lofty valuations and potentially risky interdependencies in the AI sector. However, some bright spots emerged. Intel surged 1.5% in after-hours trading on reports of potential investment talks with Apple, while Chinese tech giant Alibaba jumped 8% after announcing increased AI infrastructure spending of over $53 billion. Lithium Americas soared 70% on reports the Trump administration might consider a stake in its Nevada lithium venture alongside General Motors, lifting GM shares 2.5%. Indian ADRs posted mixed performance overnight, with most major names under pressure. Infosys ADR declined 1.52% to $16.89, while Wipro fell 0.36% to $2.79. In the banking space, HDFC Bank ADR dropped 1.14% to $34.66, and ICICI Bank slipped 0.28% to $31.75. These moves reflect continued caution among global investors toward Indian equities, particularly in the IT and pharmaceutical sectors, as uncertainty around US visa policies and Fed monetary policy continues to weigh on sentiment. Asian markets are opening mixed this morning, as investors digest Wednesday's Wall Street weakness and await fresh cues. Early indications show Japan's Nikkei facing pressure after returning from a holiday, while Hong Kong's Hang Seng is cautious amid ongoing typhoon concerns and regional uncertainty. Chinese markets remain subdued despite Alibaba's AI spending announcement. Gift Nifty is trading at 25,063, down 56 points or 0.2% from its previous close, signaling a weak start for Indian indices. The futures contract opened near 25,061 and has been range-bound between 25,047 and 25,195, reflecting global uncertainty and domestic concerns about continued FII outflows. Federal Reserve Chair Powell's comments continue to dominate market sentiment globally, with his warning about elevated equity valuations and persistent economic risks weighing on investor confidence. Oil prices have gained over 2% to near $65 per barrel on supply concerns after U.S. crude inventories fell unexpectedly and talks to restart Iraqi Kurdistan oil exports stalled. Geopolitical tensions remain elevated with ongoing Russia-Ukraine conflict and Middle East concerns providing some safe haven demand for gold, which has rallied to fresh record highs above $3,700 per ounce. The dollar has strengthened amid Fed uncertainty, pressuring emerging market currencies and commodities. Domestic sentiment remains under pressure as FII outflows continue for the fourth consecutive session. Foreign investors have sold over 19,400 crore rupees worth of equities in September so far, with particularly heavy selling in consumer services, IT, and power sectors. The Nifty has declined for 4 straight sessions, struggling to hold above the psychologically important 25,000 level. Banking stocks remain weak after falling below key moving averages, while broader market breadth continues to deteriorate with declining stocks outnumbering advancing ones by a 2-to-1 ratio. Pre-open activity suggests continued caution, with no major corporate announcements or earnings expected today. Looking at today's crucial technical zones, Nifty's immediate support lies at 25,000, which has proven to be a make-or-break level for the bulls. Below this, the next support is at 24,900, coinciding with the 50-day EMA and 50% Fibonacci retracement. On the upside, resistance is placed at 25,150, followed by 25,250. For Bank Nifty, critical support rests at 55,200, with a decisive break potentially leading to 55,000 or even 54,900. Resistance for the banking index is at 55,500 and 55,700. Key momentum indicators like RSI have cooled to neutral levels around 52, while MACD remains bullish but weakening, suggesting consolidation or further weakness ahead. Commodities are showing mixed signals this morning. Crude oil has rallied strongly, gaining over 2% to $64.68 per barrel on supply disruption concerns and declining U.S. inventories. Gold continues its record-breaking run, trading near $3,750 per ounce, supported by Fed uncertainty and safe haven demand. Silver has also gained modestly. Base metals remain subdued on global growth concerns, while agricultural commodities show little movement. Given today's technical setup and global cues, traders should approach the market with extreme caution. The Nifty's hold above 25,000 will be critical. Any decisive break below this level could accelerate selling toward 24,900. Consider defensive positioning in quality large caps and avoid aggressive long positions until clearer trend signals emerge. Bank Nifty's 55,200 support is equally crucial to monitor. With FII outflows continuing and global uncertainty elevated, risk management should be the top priority. Watch for any bounce from key support levels as potential short-term trading opportunities, but maintain tight stop losses. That's your complete market wrap for today's opening. The bears seem to be gaining strength, so trade with discipline and keep those risk management rules front and center. Stay tuned for the evening wrap and send in your questions. We love hearing from you. Wishing you all a profitable trading session ahead.